All right, it's Friday. Time to do a bit of a recap of all the stuff that's come out lately in the news. Going to review mortgage rates, going to review oil, going to review food, and we're going to review EVs. First things first, rates this year, not much of a change. We've had sub 4% interest rates for like over 12 months now. So the only reason why housing might be getting a bit more affordable is houses are getting cheaper because of the economy and the state of the people's ability to qualify and afford uh, the houses that are out there. And also, as more and more distressed sales happen and more power sales happen, you're going to see a drive further down in price here and there. So don't forget that. So anybody trying to tell you otherwise, forget it. Don't even listen to them. Now let's take a look at a couple of other things. Oil has been under 60 bucks a barrel again this week, which is the danger zone for a lot of oil companies. That's when they start laying off workers. That's when they start pulling down rigs. So yes, it is good for inflation numbers to have lower oil, and it's good for prices everywhere else because oil is almost in every product. But it also creates some issues with GDP and employment as well. The reason for this oversupply, not just from OPEC, but also from non-OPEC members like the US, have been ramping up production, probably to penalize a certain country that has invaded another country whose main export is oil. And of course, we have a very tone deaf quote from Loblaws about grocery demand being resilient, which is causing their annual profits forecast to go up. Yeah, people's need to eat is going to always be very high demand, just like people's need to have warmth and clean water, all that stuff. One day I'm going to do a video on how I think a lot of stuff's going to be tokenized. But this is the attitude of the C-suites. Like they can say this kind of stuff and just think it's normal. Like, yes, there's going to be resilient demand for food, irregardless what price you put it at. There's going to be demand for food. People will cut back everywhere else. This is why I said about those tariffs. Yes, tariffs will increase prices, but when prices go up in one basket of goods, people spend less money in the other basket of goods. If food's expensive, people have less money for trips and travel and luxury goods when the basics are expensive. Speaking of things that are expensive, the China EV market is collapsing. Now, China has amazing EVs, but they also have a very struggling economy similar to ours. They've already had to do like capital injections. They're probably doing stimulus. Once governments start talking about stimulus checks like the US and the UBI that we have on the books coming, and the tariff stimulus checks that the US and China's done once the government starts giving you money, there's problems. This is one of the reasons why China wants that tariff that we have on China EVs gone, so they can start correcting their EV market. The question is whether our government will still continue to protect our auto industry by keeping those tariffs. I don't know.